Okay, so we just learned how to work with a contribution margin income statement for a product and plug it into a bunch of equations to get a bunch of cool numbers. However, that was with just one product. So before we just did something called the single product CVP, only one income statement. However, now we're going to be focusing on what happens if we need to do all that for a whole business that has multiple products within it. Honestly, it's not that much more complicated. So all you have to do is just a few steps. So step one is just to make a table with all the products and their contribution margin income statements. So you want to start with A and just do their contribution margin income statement. And then write down B's and do the same thing right next to it. And then finally, you're going to want to make a totals column. So you're going to add up A's revenue to B's to find the total revenue and add up all the costs and then contribution margin, fixed costs, and then subsequent operating profit. And then you're almost just going to forget about A and B and just look at this totals column and act as though it is just one product. So any of these equations that call for the contribution margin and fixed costs, you'll just use the total contribution margin and fixed costs and plug them in. So again, just make a totals column, add up A and B's contribution margins, and then use the totals column contribution margin just like you would with a single product. Where this becomes a little more difficult is whenever it asks you for specific questions, such as what is the revenue required for A? Now, if you remember, revenue required is a target profit problem. So it's saying if we want a 600,000 operating profit, what revenue do we need? So you would do this for the whole company just by plugging in this total column numbers, but if it asks for item A, you'd have to do this. So you would first have to find the total revenue required. So you'd find the total revenue required. So if you have that 600,000 operating profit that you need, then you may figure out that you need $1 million in revenue required total. That's here, revenue required total. Now, to figure out what portion of this revenue A needs to account for, you simply do this. Look at the initial revenue in the income statements that A made, and then just simply divide that by the total amount of revenue to figure out what percent of the revenue A contributes to. So in this case, A contributes to 4 out of the 7 revenue. So for every $7 in revenue you make, A contributes to around 4 of those. And therefore, let's just say that's like, just to keep it simple, 65%. So that A contributes to like 65%, which does sound like right. But anyway, so if we need to make $1 million, then you simply multiply that 65% for A times that 1 million to figure out what chunk A needs. So you just do that 65% times the 1 million to figure out what amount of that total revenue would be A. So the equation for that would just be required revenue for A equals the revenue required in total multiplied times the revenue of A divided by the total revenue. Remember, revenue and required revenue are kind of different in this sense. So now, if it asks you for the required units for A, you would simply take what you found above divided by the price per unit of A. Now, it gets a little tricky again if it asks you for the total number of units required to hit that target profit. Your instinct may be just find the total revenue required and then divide that by like an average price because it is asking for total units. However, that doesn't work. What you would have to do to find the total units is find all the units for A using those above methods and then add on all the units for B using the above methods and all the units for C and so on. And that would give you the required units total. Now, And that's all explained here, by the way, in these paragraphs. So if you didn't catch anything I said, you could just pause it and read that. Now, that was for required revenue, but it can also go for break even. So if it asks you for the break even revenue for A, so what amount of the break even revenue does A have to contribute to, you would just do the break even total, and then again multiplied times that revenue of A divided by total A. And then for break even quantity, just divide that by the price. And for break even quantity total, it's the same thing as before. You have to add up all of those break even quantities per product. So yeah, that's basically as complex as it gets. For the most part, just make this total column and then plug it into these equations. But if it asks for specifically for product A or B for these types of problems, then you'll have to do a little more.